This is Eric Mother with Mother.com. All is well. Let's take a look at markets here with about 27 minutes to go before the close of the session, which is also the end of the week. Let's take a look at where markets are trading right now in terms of weekly performance. We can see for the week, the Dow is down about 1.6%. The Nasdaq is positive, up about 1% as of right now before the close of the week. And we can see here S&P 500 is down about 0.5%. So a mixed bag. So let's begin with the Nasdaq weekly. And on the Nasdaq weekly, we can see that the Nasdaq did manage to recover back above the previous weekly closing high from July. And that's at 10,617.44. Now, we had already discussed this in the last weekend market edition, and we were talking about if the Nasdaq was to hold above this level, then that's good support and the market should be stabilizing, if not eventually building to the upside, as long as it is above this number. So we've seen a recovery in the Nasdaq. That's exactly what the bulls wanted to see. So I would say that's a good sign. Now, of course, if the market was to retrace, break down below that level, then the signal will be that support has failed and that the market is due for down action. Keep in mind, this was the breakout here, very nice breakout that led the market to the current intraday all-time highs right here. So that breakout in essence has been tested. Market's gone above that level. It's come all the way back, bounced on it over a period of about 3 weeks, and now pointing higher. Net, that is good for the general market. Now, there's another way of looking at this, which is the RSI, of course. And we can see here, if we take a look at this break line, we can draw it as such. Now, this break line is consistent with this break of the market as of mid-February, before we see this massive plunge in global markets. So a big break of that RSI level. Now, just understand that this break just happened to be around approximately just under the 61.8 level. Now, what we can do with that break point is draw it this way. And you can see that as of this week, the market is doing its best to hold above the line. The last bounce on the line was here. The market went higher. We also bounced on the line here, which was this period right there. So as long as we are bouncing on this RSI level, the market is stabilizing and looking good, of course, unless we open the new week or the next couple of weeks. If we break below that level, that could be a sign of a market that has failed to find support where it needed to find support and is due for a pullback. Now, in this video, I'm going to be discussing the daily charts, heavy on the daily charts, because there's a lot of message there. Take a look at the Nasdaq, and this is consistent with what I was discussing during the week, and also as of last weekend's market analysis video. I was emphasizing the need to watch those daily charts, because there's an argument that can be made that the market, having moved above this RSI level of the lows of April, we can see we haven't been back to those levels. Market's been well above this movement here. We've had a nice move to all-time highs as far as the Nasdaq is concerned. So that was a critical RSI level. We're going to take that line there and draw our uniformity support line based on my uniformity method. Links are going to be in the description. But we can see we've actually bounced on this line about 4 to 5 times. So 4 times we've been bouncing on this line since the beginning of September. Now, this bounce has come with the prices making slight lower lows. And so we can call that also, in a sense, to be positive divergence on the daily chart. So net, as long as that's the case, we can argue that the market is showing signs of stability, and that as long as the RSI is holding above this line, the daily charts are suggesting stability, if not eventual move beyond current daily highs for September. Now, of course, the line is so well defined that should we break and stay below that line, that's going to be giving us a signal that the market has run out of momentum and due for another push lower. Again, as I was stating, a lot of daily charts, but before we take a look at the daily, take a look at the 4 hourly for the Nasdaq. And even here we can see the same area of the RSI. I'll just draw it like that. This is the 4 hourly. This here is the movement of the RSI off the lows here. Of course, we haven't been back to those levels. Those levels haven't been violated. In fact, we can say this was a support area for the lows right there. And so over the last couple of weeks, market's been bouncing on this line. This is constructive as long as that line holds on the 4 hourly. Take a look at the S&P 500 daily. Now, during the week, I sent you a brief video explaining this line here. This line was the previous RSI topside resistance line on the S&P 500 daily, connecting the highs here, 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 and there's a slight high right there. So what happened here is we broke out above that level. Market had a good response. We haven't been back to those levels, and then we have uniform activity below the line, back above it. Uniform activity below the line, back above it. And we've been bouncing on this line throughout this process lower. So my thinking is that as long as the market is above the blue line and holding and above it, this is actually constructive for the market and might be explaining why we are seeing a good push on Friday's action. Now, as I pointed out during the week, a break below this line would be a fresh sell signal. And also we can bring back the other line, which we saw on the Nasdaq, which is consistent with a lot of the charts you're going to see in this video, which is this line here, this RSI level, which corresponds with the movement of the lows here. So that green line and the blue line, both lines are holding. As long as they're holding, markets should be stabilizing. Now let's take a look at GLD again on the daily, which is where we are seeing medium-term support on most of these charts. Clearly, this is off the recent lows of March for GLD and the metals. And we can see that if we take this RSI price action or RSI, we can see that this is where the RSI moves above this range. Gold hasn't been back to these levels. So we can take that line and draw our uniformity support line. And you can see as of right now, the market is doing its best to hold above the line. If this continues to be support, then this is where the pullback in gold finds support. Of course, a break below this line would also be pushing this instrument below 30.9. That would be bearish if it happens. Right now, it looks like it is similar to what the S&P 500 is doing and the Nasdaq, doing its best to find RSI and price support. Take a look at the 4 hourly. And on the 4 hourly, we can see that if we take this level here, we see a nice movement in price off the lows there. Extend that line based on my uniformity method, and the market is aware of this level, and that's why it's doing its best to hold support. If this can hold, that's constructive and stabilizing the metals. If this breaks, expect there to be a fresh sell signal. Now keep in mind, my monthly comments on the dollar is also something to consider. And if you want to see those comments, take a look at the last weekend's market analysis video. Now taking a look at crude oil, and we are still, in my opinion, in a very tight sideways market. We can say, let's call it this range. We pretty much stuck in this range since about June. So really trying to analyze this is, I think, over analysis. Just in a sideways market, at some point what the bulls want to see is this market clear this range to the upside, and bears would be excited to see this market break down below this range. So right now I would say pretty much we are in no man's land, and this is consistent with where we are seeing the 50-day and the 200-day moving average both of them are trading exactly where the market is trading, which is right here. So sideways it is as far as the crude oil market is concerned. Now if we take a look at XLE, energy tracking ETF, we can see net this has been on a downward move, and this is consistent with our observations on the weekly and the monthly chart. And we can see here this continues to be bearish in my opinion, as long as the RSI is trading below 30.9. This continues to be sideways to down as far as the energy stocks and the energy market is concerned. In a sense, this is a good example right here, where we see that this period, net, the RSI was below. So this period right here, all of this period, corresponds with the RSI holding below 30.9. And you can see this magnificent plunge. And all of this can be explained with where the RSI was trading. So again, net, this is sideways to down, the XLE is sideways to down, as long as the daily RSI is below 30.9. Let's take a look at some global markets. Take a look at the Vanguard ETF VT that tracks global markets as a whole. We shouldn't be too surprised that this is going to be consistent with what we see with the US markets. Most of these markets are synchronized. You can see this is just consistent with what we've seen so far. Daily charts coming to find support based on my uniformity method. As long as this is holding, this is good and constructive. If it breaks down below that level, then that's going to tell us information that the market is due for continued push lower. EFA, the ETF that tracks European markets, similar with the S&P 500. If we take the previous topside resistance line and extend it out, we can see that what was resistance became a breakout level and turned into support during all these pullbacks. And as of right now, as long as this is holding, this is good. Now, if it holds, again, good. If it breaks down below that level, then that's going to give us a fresh sell signal. It also happens to be an area where we have a flattening out 200-day moving average. So net, that 200-day moving average is also giving some support. This is also good for the market, generally speaking. Take a look at the EEM, the emerging market ETF. Again, this is just pretty much the same thing we've been discussing here. This is similar to the S&P 500 and the VT. That's the line right there. Anything above that blue line is stabilizing the market. A break below that line and we see lower prices. Take a look at the Canadian market. Again, on the daily, we can draw this line from here. And as long as that line is holding, this is stabilizing the Canadian market. A break below this line and this could plunge. It also again happens to be conveniently around a flattening out 200-day moving average. As long as that is holding, that is also constructive. Keep in mind, the market's been coming back to test the 200-day moving average. It held here, and now is holding here. So as long as it can hold, that's good. Now, should the market go on and proceed to break below the 200-day, be on the lookout for a substantial push to the downside. Again, we see all these markets are synchronized. Take a look at the NIFTY, and if we take a look at this RSI topside, we see that coming off the lows early April here, prices haven't been back to this range. So we take that RSI information, again, based on my uniformity method, draw it that way. And again, it's uniformity for a reason. That's why I call it that. This is uniform action. I didn't do that. You didn't do that. The market itself formed a nice V-type formation. As long as this is holding, this is showing that the Nifty is stabilizing and giving signs of a sideways to eventually higher market. It also, again, conveniently, and we've seen this, happens to be around a flattening out 200-day moving average. The last time we came to the 200-day moving average, which is here, the market held and pushed higher. So net, as long as the RSI is holding, The 200-day moving average is holding. That is constructive for market bull. As I said, most of these markets are synchronized. If we take a look at the daily chart for Bitcoin, we can draw a trend line of the price based on intraday lows. And you see a nice support this past week. So that is also consistent with other markets we've seen. Take a look at the RSI lows line. This week we came and held on this line. And pretty much this is the market telling us there's stability in all of these instruments. Coming off the lows, this is where the RSI had some movement higher. So just a simple RSI line right here tells us that this is where the cryptos came off the lows of late March, which is here. Of course, we haven't been back to those levels since. Now, we take that information and draw our uniformity support line. And we see that this market, which is a crypto market, Bitcoin, has been using this for support. And now it bounced on this line. US markets are just about to close. Couple seconds, here we go. This is Eric Moore with Mother.com. Love and light, light and love. Namaste.